Hey, Alpha fan, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just want to jump straight into the charts because I think there's something important that I found that should be shared with every individual in the Alpha family because this has been very important in the past in terms of the history of Bitcoin ever since the dump over here at $69,000. And you guys who have been following me, you probably know by now that I have kind of a quirky system of curves that I use at the bottom of all the drops that we've had, and then I find a growth curve to it, which could be anything from days to weeks to months, and it just happens to always come to an apex, right, on a almost perfect curve. Sometimes there's a little bit of wicking during the panic drops, right? The panic drops fall through a little bit. And sometimes, like up here when we were just falling down, you might have a little stray wick like that. But other than that, these curves have been almost perfectly conforming. And even the biggest one goes all the way back, through the May dump. Okay, so that huge dumpola back there was just massive, and yet still this curve completely conforms and behaves well compared to it, right? When looking at it. And so, what we can find here actually is a very clear pattern where you break down from the curve, you retest the curve higher than the breakdown, and then you dump pretty hard, right? Break out, kind of pop back up, break down, right? I mean, you can fiddle with these things however you want, whatever. Okay, I don't really care that it's perfect or not. The key point is it's just something to watch out for. You start violating that curve significantly, and you can consider that there may be a harsh drop coming up. And so, of course, you can look at this one, and who cares if we can fiddle with it this way or that way? It doesn't matter. What you can see is that the price breaks down and then it pops back up, right where you would probably expect this growth curve to be conforming, right? And then at that breakdown, you see a sudden and harsh, like just continuous drop. Same thing over here. This is most strong when you have at least 4 points of touch. So like touch, 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 and so we have 4 points. That makes a very difficult to move this thing because you start losing touches, right? These ultimate lows on the curve itself. And so while you might miss a touch like right here or right here or right here, that's not really the key point. The key point is to not break your previous 3 to 4 touches while you're establishing a new low touch. And when you have that low touch after this kind of parabolic phase, right, you can see where it's pointed down or sideways, right? And then you have a parabolic phase. The one at the top of the parabolic phase, right, not too far above your price action, maybe in the middle of your price action to the top of the price action. That one is actually the most in danger of breaking down because it's closest to the top of your range or perhaps even pushing out of your range. And these things can just dump suddenly. And so what are we seeing right now? We have, 1, 2, 3, 4, 5, and then 6 touches over here. I can't wiggle this line or it will separate from the price action. There's a little gap here, right? So I must keep the line like this because we've had enough touches, except for this scary part, which, by the way, that's not even on the professional exchanges. The professional exchanges don't have this kind of panic wick. Only the 24/7, like a regular retail, exchanges have this panic wick. And so this curve is actually very legitimate. And what we have is a breakdown and a bounce back up to retouch the curve, right? And so what happens when we bounce back up to retouch the curve? We seem to be getting rejected here, right? And the danger is that we could fall down. Well, the question is, can we provide any statistics for that? Can we understand, perhaps mathematically, what are our chances of breaking down the way that we have broken down the past? And do we have any other signals that could go along with it? And so that's what I've been investigating. And so you can see I can check with a multiple, number of indicators, and just to see if we have any kind of a confluence with it. And of course, I have other types of indicators on other, panels of TradingView. But the one that I want to pay attention to is a signal that I found, which is this one right here, right? And so the first thing that I want you to notice is look at the, let me turn off the curves, and let me show you the circles of where this indicator flashes, okay? So it flashes here, 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 here. And then, of course, the fact that it's flashing right where we are right now, that should raise some eyebrows, because if you can see, this indication is flashing all in these points right before we broke down, and it seems to correspond almost perfectly with my growth curve model. And look at the circles on these things. The circles, right, where the signal is actually flashing, it overlaps almost perfectly, right? You can see the circles suddenly appear. And in fact, I get even additional signals right here that would have warned of a drop. And so I think that we can establish that this is a pretty good signal, and it's even better than the growth curve model. And when combined together, it could be a little bit scary. Right now, we have them combined together. So just ignoring the growth curve model for a second, let's just look at the signal itself. The last 7 out of 8 instances of this signal have resulted in a massive drop. And there was one right here which just resulted in sideways action. It didn't result in a massive drop. And the modus operandi of this is a U shape, kind of a pump before a nosedive. So there's basically a fake out up and then a harsh and punishing downturn. Fake out up, harsh and punishing downturn. Fake out up, harsh and punishing downturn. And then you see that also here when we were at 65K, a harsh pump up. I mean a pump up, and then a harsh and punishing drop afterwards. And so really, there's only one signal out of these out of the last 8 which could be considered to perhaps just have been neutral, okay, just neutral, but still it came before a massive drop. And there's also one that happened right here, which is also neutral. It just goes sideways from this one. And I'm just not going to count before we had the downturn, because I'm only trying to look at the downturn era. I don't want to mix it with perhaps bull market data, right? So I'm only looking for the downturn data. And out of those, 7 out of 8. But even if we count the one just prior, it still is a neutral one that still occurred before a drop. Okay, so I consider these neutral, or just like precursors, maybe like jumping the gun, right? Acting a little bit too early. So what is the signal itself? Well, we're talking about the 8-hour volatility on Bitcoin. And what you can see, right, if I just to bring this down a little bit, what you can see is that out of all these instances of volatility, let me see if I can just zoom in here so that you can see each one individually. You can see the one that we're having flashing right now is maximum volatility at the bottom of the indicator. And then you can also see one right here, maximum, low volatility. You can see maximum low volatility. So we are highly, contracted on the volatility, and highly contracted on the volatility. Um, highly contracted, highly contracted, highly contracted, highly contracted. And you can see this is almost part of the same move, right? Because whereas this one went all the way up to the red zone, all the way up to the red zone, this one didn't even get across the middle line. And so this defective signal, right? This just kind of neutral sideways signal actually looks like it's part of this signal and may just be considered to be part of the same move, right? And then, of course, we have our top of the market over here, which we had this signal just before it, but that I consider to be on the side of the bull run. And so I'm not sure what to make of it because it was like right at the middle of the top of the bull run, and we had absolutely no indication or confirmation of a downturn whatsoever. And so I'm just going to dismiss this data. But even if we consider it, it still was only sideways to this one and obviously was a precursor to a massive dump, right? And so again, guys, like looking at this chart in just a glorious detail here, what we can see is that we have the the possibility of a pretty severe dump to the downside, which could be as little as 10%, but could be as much as 45%. And again, these three may actually have been acting as part of the same move. And so them on their own, there was a 36% move. So the average here seems to be around 20 to 30%, with a range of perhaps 10 to 45%. So what would 10% down be on this chart? It would actually be coming back to around $20,000, right? Maybe $20,500. What would 20% be? It would be about 18,000. What would 30% be? It would be 16,000, maybe 500-ish, we could say. And then let's just say the maximum of a 45% move would be 12,000, 700, maybe 12,800-ish, okay? So we could be talking about anywhere between 20,000 to $12,800 if we take into account this kind of historical signal that I've discovered through my own analysis of the chart, and which I based upon, of course, my curves theory, right? My growth curve theory of breakdowns. And now, will this instance be one that defies it, right? Will it be one of those sideways ones, and maybe we get a last pump, like a last really good pump, sort of like we did at the top of the market before we have a pullback? Or are we just going to make kind of like a little fake out and drop, sort of like what we did here? And we can take a look at the shape of these things. If we just get in a little bit closer, we can just take a look at the shape of the actual drops. And what you can see is that the signal here, actually flashed on the candle which suddenly dropped. Okay, so it wasn't even really front running it, but we did have that kind of neutral signal up here. So that neutral signal did give us a heads up. And what we can say is that if we look at the neutral signal, right, the neutral signal right here, that it did precede a dump. And if I just put like one of these neutral signal things right there, then what we can see is that let's see, let me get a drawing tool, that we were actually at the top of this pump, and that this signal actually preceded a pretty sizable dump of its own, which is approximately 7%. So more in line with those kind of like 10% ones, but still pretty bad. And then what happened is the modus operandi of this signal is that it has kind of this fake out to the upside and then a massive dump down, right? So let's go ahead and just explore the other areas here. Same thing here, right? You have a fake out right before it and then a massive dump down. Over here, you actually are front running the dump, but you still get kind of a fake out. This one gives you a heads up, a fake out, and then a massive dump. This one also gives you a heads up, a fake out to the upside, and then a massive dump. And even if we count this, this kind of false signal right here, which just had sideways action, you can still see it still had a pump, right? And so it's kind of like a fake out and then sideways and then dump, right? And of course, these ones didn't give me a signal, so I'm only looking for signals that actually align with our current setup. And of course, in this one, there was a fake out to the upside before the signal flashed. When the signal flashed, it was already too late. We were in the process of this massive 20% dump, which honestly didn't even stop until down here. So you can actually count that one as a 45% dump as well. It just so happens that there was another signal that flashed right here, so we're just giving some credit, that this one may be, maybe 20%, right? Before it gets to this kind of a low. And then we have a new signal. But even so, there was a 45% dump if you consider it, until this point down here, until we started to really pop up again, right? And of course, this one, what do we see here? We see that just fake out and then dump, right? And the signal happened at the top of this one before the pump. So midway on the fake out pump, but still preceded the massive dump, right? And same thing here. It actually occurred with the fake out, and then there was actually a double fake out and then the massive dump. So you can see that this signal doesn't have to exist, on the drop itself. It can exist on the pump, or it can exist right before the dump. And so what would that suggest? It could suggest that we could have something like this. We could even have a double fake out and then perhaps a dump, or we could actually just already have had the fake out, and perhaps then we're just going to be dumping, right away. So guys, again, I'm just sharing the signal that I found. I don't control it or anything like that. I can't tell you more about it. I can't find any true consistency with any other signals on the indicators that I've looked at so far. But because this signal is flashing right now, I did decide to just go ahead and make this video before I had time to really analyze, all the other, possible indicators plus whatever else I might be able to find, to see if there's anything else that could give us a clue as to where this might be going. However, just on a structural basis, I would consider that we do have some support in this area. Of course, I have analyzed that for you with a possible support. So we do have some support there at maybe 22,300-ish, which we actually did bounce off of already. And then we also have some support around 21,300-ish. We also have indications which I made on one of my last analysis videos that probably we could see around 20,000. And I think if you just use a very simple trend line, you can probably understand that even if we were going to come back to trend, that would be around $20,000. So there's a couple concepts for that. You can also see that we have this kind of a choppy area right here. We have these wicks right here. So that could also potentially be kind of a horizontal support in that $20,000 region. And so that would suggest the smallest dump, right? The smallest dump of approximately 10%, maybe even less than that. We could perhaps get to this one and still make a higher low, right? Maybe around 21,300. But if we do just cut through all of this and maybe come back to trend, then we're talking about 15%. And then we could potentially check out the bottom of the range, even as far down as 45%, or maybe we make our way there over time, right? Maybe there's different levels that could perhaps play out, right? Because we've seen this signal play out in a multi-layered way in the past, and we don't just have to assume that it's going to be all, one push down. But this signal is suggesting to us that we do have the potential to move anywhere between even this fake signal, which had like a 7% dump, right? So anywhere between 7% to a whopping 45% down could be actually legitimately possible. Now, do I think that it would happen this weekend? Actually, I suspect that we might be getting some fake out to the upside perhaps during this weekend, because all the markets, if you look at the stock markets are pretty, are pretty toppy right now, right? And so I would suggest that probably we're going to get a move maybe to the upside, and maybe kind of like these fake out moves, which seems to be so common with this signal. Just kind of like a fake out to the upside seems to be very common with this signal. I think that we might get that. There's a much smaller chance that we just drop off of a cliff, but there's a much higher chance that we actually could get a little bit of a pump with the corresponding to this signal. And that would obviously be more possible to happen on the weekend when the stock market is closed, because these market makers on crypto can take liberty, right, with the 24/7 exchanges that don't have to follow the rules of the professional exchanges, which obviously close for nights and weekends and holidays and things like that. The 24/7 exchanges are just always open, and they're always being manipulated by this, crypto specific, guys. Whereas once stocks open, the price action is more likely to follow stocks. And if stocks are telling me that we have the potential to dump, because of course, we're getting pretty toppy, right? Which again, I covered in previous videos, we're getting pretty toppy here. If you take this diagonal right here, even though of course we could have the potential for a wick up here, um, we had a wick here, we had a wick here, but most of our price action was underneath this dotted line. On the Dow Jones, it would suggest that we could potentially roll over any time now. And so maybe that fake out could come in the beginning of the week, when maybe this chart pushes up just a little bit more before killing over. We have the Russell 2000 making it very complicated, because it's actually broken out of its trend. It's the only index to have actually broken out of its trend line, but it is at a highly resistant area, and so that could suggest that we could just roll over. Let's see, for the SPY, of course, the SPY also has a little bit more ways to go, and so that looks a little bit more like the Dow Jones. But then for the NAS 100 is absolutely at resistance. And of course, a lot of this stuff on the NAS was just pumping and pumping. So perhaps if the NAS is topped out and starts to have some retracing, then perhaps crypto will as well. And so that could be, as early as Monday. It could be as early as Tuesday, right? Just in the early week where these things start turning around. Now, if these charts are going to put in some type of a double top, sort of like what we got up here, then that could also be the call for the fake out, right? During that double top being put on stocks, or the last thrust on some of those other charts that still had overhead room. That could be where the fake out comes on, in our kind of signal that I've been monitoring. And so, guys, I hope you appreciated that. I'm just going to put this one out for the Macro Monday video, because I think it's significant. Now, I also want to remind you that these type of volatility indications, they're actually direction neutral. And that's why it's really critical that we find some other data that goes along with it. But the problem is, when I look at, for example, the Stokes, I mean, the Stokes doesn't seem to have a clear alignment. In this case, it's pointed upwards. In this case, it's pointed upwards. In this case, it's pointed upwards. In this case, it's pointed down, right? Let's see, where's the next one? This one's pointed down. This one's pointed down. This one's pointed down. This one's just neutral. It's literally just turning around. This one's pointed up. Right, so you can see that even if I use, these type of momentum, indicators, I really can't find a consistent pattern there. Of course, this signal would most likely be flashing during a turn down, because obviously it dumps, right? So the MACD is pretty much useless, because we need to find something else that might trigger it. But here we can see the MACD was very high. Here it was neutral. Here it was just kind of neutral, right? Here it was coming down. Here it was actually going up. Here it was neutral. and right now we kind of have a neutral posture that, kind of suggests it wants to go up. But if you guys just look really carefully, like this thing is starting to round, at the bottom here, and that could suggest a decoupling of the EMAs, where it might just spill over and have a second downside, right? Which could lead to the drop. Let's see if we can find another example of that. Uh, sort of like in this area, right, where they just kind of like meander sideways, and then it ends up turning around. Even though you may have thought it was going to pop up, it ends up just flipping back down, right? So there's not a really good example, but and this one is very interesting how it's oriented right here. It's very interesting. So this blue line can either go down or it can go up, and but anyway, it's rounding, which suggests it could round down, and the other two are pointed down. So overall, that's not the best look. You would like to see them kind of sharply pointed up, right? Let's see if I can get a good example here. Yeah, you can see this one is kind of sharpening. They're sharpening into a little point, right? It's a little sharp corner right there. This one, it's sharp, but this one's just broad, and the blue one and the red line are separating, right? So they're not making it, if you continue this pattern, this is going to round up, it's going to round down, or just go sideways, and they're not going to touch, right? And that could suggest that the chart is going to flip around. So we do have to watch this MACD, but the key point is that the MACD is not predicting any particular direction on it. In terms of our DMI and ADX, I really can't see, any type of, logical pattern on this. There just seem to be all over the place. So, I don't think that's going to give us help. Obviously, it would probably all turn down once we started to drop. But there's just nothing that gives me a clear directionality to this. And one thing that we could possibly consider is that our directional volatility does suggest either flat or down, flat or down. This one was up, but it was kind of toppy. And this one was up, but it was also very toppy. And so, there's just not a clear indication here. And even if we were to take the directional volatility, you can see we do have the possibility of just continuing on our way down. We are underneath the 50%. So that would suggest that while we could get some type of pop-up on the charts, maybe this thing's going to continue to the downside, having reached its bottom, check the top, probably going to meander back to the bottom. Um, most likely. However, you can see these areas where it pops up and then it gets to this type of an area, just kind of like fills it out and then pops back up. So again, I can't really take anything from this. I don't know. This is just a very neutral posture. I can't really determine anything from that. Maybe if we take a look at the higher time frames, we can see something that might give us an indication. But let's look at like the 5-day. 5-day turned up, neutral, up, down, 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 down. Okay, so in the majority of the cases, they were turned down to begin with or about to turn down. But again, like how would I know, right? How would I know if this isn't going to just suddenly turn down? So that's the issue here, right? You can just suddenly put a V on this. Yeah, so I think at least on the 5-day, there is some hopium that perhaps this volatility could go the other direction if the Stokes doesn't turn around. Let's check on something like the 3-day. Now, the 3-day is getting a little bit toppy here. It's by no means maxed out, but you can see these turnarounds, without the chart being maxed out. So it doesn't have to be maxed out before turning around. It is high enough that you can see the dotted line that I have here, right, at about 65. It's high enough that it could start to turn around at any time. So let's say that we get one more pop up on the charts, then there's a good chance that it could turn around, and perhaps that goes with the signal to the downside. Let's see. maybe the 2-day. No, see, the 2-day is even suggesting that we're losing that momentum to the upside and that we do have a chance to fall down. So that would just give more credit to the fact that we could perhaps turn down. Sort of like this choppiness right here, you can see that same type of choppiness right there, right before it just massively turned down, right? And so even this clean signal can catch you by surprise, but this choppy signal tends to, form a kind of top on the Stokes. And then let's see, down, top, down. The fake out was to the upside. This one actually turned down, so I'm not sure if the signal turned it down. Let's see, down. This was actually headed up, so this could be a counter indication that it doesn't maybe the Stokes isn't the key issue, right? So, guys, I'll continue to keep looking at it, but I just wanted to give you guys a fair warning to perhaps protect your positions. Don't get super over bullish. Don't be a perma bear or anything. But since the top of the market, we've had this historical signal, at least 8 times. And 7 of those 8 times resulted in a massive drop, and one of those 8 times was just kind of neutral, but still obviously preceded a massive dump, and itself had a small, in itself had a small move. So, including this top one up here as well, with a 7% move down. All right, guys, just wanted to give you a warning. That's your alpha for the day. Stay safe and happy trading.